Today, I'm going to share a game-changing insight that transformed my financial life and has the potential to do the same for you. It's not just a secret. It's a mindset shift, a perspective that has the power to unlock doors to prosperity. So, buckle up and get ready to discover the key that turned my journey from financial struggle to abundance. I got rich when I understood this, and now, it's time to pass on the knowledge that can reshape your financial future. Warren Buffett, one of the most successful investors of all time, has shared various pieces of advice over the years. Long-term perspective, Buffett is known for his long-term approach to investing. He advises investors to think of stocks as businesses and to focus on their underlying value over time. Value investing, Buffett follows the principles of value investing, which involves finding companies that are undervalued by the market. He looks for strong fundamentals, including a competitive advantage, solid management, and a reasonable price. Margin of safety, Buffett emphasizes the importance of having a margin of safety when making investments. This means buying stocks at a price significantly below their intrinsic value to protect against unforeseen market fluctuations. Understand what you invest in. Buffett suggests that investors should only invest in businesses they understand. He often warns against investing in things that are too complex or outside one's circle of competence. Quality over quantity, Buffett is known for concentrating his investments in a relatively small number of companies that he thoroughly understands. He believes in quality over quantity when it comes to building a portfolio. Be fearful when others are greedy, and greedy when others are fearful. This famous quote highlights Buffett's contrarian approach to investing. He suggests that investors should take advantage of market opportunities when others are panicking or overly optimistic. Remember that while these principles reflect Buffett's general approach, successful investing also requires adaptation to one's own risk tolerance, financial goals, and market conditions. Robert Kiyosaki, the author of the Rich Dad Poor Dad series, is known for his perspectives on personal finance and wealth building. Financial education, Kiyosaki places a strong emphasis on financial education. He suggests that individuals should continuously learn about money, investing, and how to make their money work for them. This education includes understanding assets, liabilities, and the importance of cash flow. Invest in assets, Kiyosaki distinguishes between assets and liabilities. He encourages people to focus on acquiring income-generating assets, such as real estate or investments, rather than accumulating liabilities, which are things that take money out of your pocket. Entrepreneurship, Kiyosaki advocates for entrepreneurship as a means of building wealth. Starting and owning a business can provide individuals with control over their financial destiny and the potential for unlimited income. Mindset shift. Kiyosaki often talks about the need for a mindset shift, particularly in how one views money and wealth. He challenges the traditional mindset of working for a paycheck and encourages people to think like investors and business owners. Taking calculated risks, Kiyosaki believes in taking calculated risks to achieve financial success. This includes being willing to step outside of one's comfort zone and explore opportunities that have the potential for significant returns. Multiple streams of income, Kiyosaki promotes the idea of having multiple streams of income. Relying solely on a job may not be sufficient for building lasting wealth, and having diverse income sources can provide financial stability. It's important to note that while Kiyosaki's teachings have resonated with many, financial success is a complex and individual journey. Not all financial advice is one size fits all, and individuals should carefully consider their own circumstances, risk tolerance, and financial goals. Jeff Bezos, the founder of Amazon and one of the wealthiest individuals globally, has shared various insights and principles throughout his career. Customer-obsessed approach, Bezos emphasizes the importance of focusing on customers. Long-term vision, Bezos is known for his long-term vision and willingness to invest in projects that may not show immediate returns. This approach has allowed Amazon to innovate and expand into various industries over time. Innovation and experimentation, Bezos encourages a culture of innovation and experimentation. He believes in taking risks and learning from failures, viewing them as essential steps toward success. Frugality, despite Amazon's massive success, Bezos has advocated for frugality and efficiency. He has often stressed the importance of being cost-conscious and avoiding unnecessary expenditures. Focus on what won't change, Bezos has spoken about the importance of focusing on fundamental principles that are unlikely to change over time. This approach can guide decision-making and strategy in a rapidly evolving business environment. Day one mentality, Bezos coined the term, day one, to express the idea of maintaining an entrepreneurial mindset, even as a company grows. It reflects a commitment to staying agile, innovative, and customer-focused, as if it was still the first day of operations. While these principles capture some of the key elements of Bezos's business philosophy, it's important to note that success is often a result of a combination of factors, timing, and circumstances. Peter Lynch, another highly successful investor, is known for his tenure as the manager of the Fidelity Magellan Fund and his book, One Up on Wall Street. Lynch has shared several principles that investors can consider to potentially outperform the majority of investors. Invest in what you know. Lynch often advises investors to focus on companies and industries they understand. If you're familiar with a business and its products or services, you may have an advantage in evaluating its potential for success. Long-term perspective. Like Warren Buffett, Lynch is an advocate of long-term investing. He suggests that investors should be patient and not be swayed by short-term market fluctuations. Look for growth opportunities. Lynch is known for his emphasis on investing in companies with strong growth potential. He recommends looking for companies that have a competitive edge, a solid growth strategy, and the potential for increasing earnings over time. Understand the business model. Lynch advises investors to thoroughly understand the business model of the companies they invest in. This includes understanding how the company makes money and how sustainable its competitive advantages are. Keep an eye on P/E ratios. Lynch often looked at the price-to-earnings (P/E) ratio of a stock to evaluate whether it was overvalued or undervalued. However, he also cautioned against using this metric in isolation, as context is crucial. Stay informed. Lynch encourages investors to stay informed about the companies they invest in and the overall market. It's crucial for investors to conduct their own research, consider their risk tolerance, and, if needed, seek advice from financial professionals. Additionally, past performance does not guarantee future results, so it's essential to stay vigilant and adapt to changing market conditions. Dave Ramsey is a personal finance expert, author, radio show host, and motivational speaker known for his straightforward advice on managing money, getting out of debt, and building wealth. His teachings are based on a set of principles that promote financial responsibility, debt reduction, and long-term wealth building. Debt snowball. One of Ramsey's well-known strategies is the debt snowball. This method involves paying off debts in order from smallest to largest, regardless of interest rates. The idea is to gain momentum and motivation by achieving quick victories with smaller debts, then applying those payments to larger debts. Emergency fund. Ramsey emphasizes the importance of having an emergency fund to cover unexpected expenses. This fund acts as a financial safety net and can prevent individuals from relying on credit cards or loans during emergencies. Live on a budget. Ramsey encourages individuals to create and stick to a monthly budget. This involves tracking income and expenses, allocating funds for different categories, and prioritizing needs over wants. Cash envelope system. To control spending, Ramsey recommends using the cash envelope system. This involves allocating specific amounts of cash to different budget categories and only spending the cash available in each envelope. It helps promote discipline and prevents overspending. Investing for the future. Ramsey advises on investing for long-term wealth building. He suggests focusing on tax-advantaged retirement accounts, such as 401ks and IRAs, and diversifying investments in a mix of mutual funds with a history of solid returns. Live below your means. Ramsey promotes a lifestyle of living below one's means. This involves avoiding unnecessary debt, making conscious spending decisions, and saving and investing for the future rather than succumbing to a high-consumption lifestyle. Financial Peace University. Ramsey offers a program called Financial Peace University, which provides education and tools for individuals and families to take control of their finances. The program covers topics such as budgeting, debt reduction, investing, and retirement planning. Dave Ramsey's advice is often delivered through various channels, including his radio show, books, and online resources. As we wrap up this eye-opening journey, remember that wealth isn't just about money, it's about mindset. Embrace the power of this understanding, incorporate it into your financial strategy, and watch the transformation unfold. Your financial success story is unique, and the key to unlocking it lies in the decisions you make today. I got rich when I understood this, and now, armed with this knowledge, I challenge you to embark on your own journey to financial freedom. Here's to your prosperity and a future filled with abundance. Make it happen.